Assalamualaikum to everyone. My name is Faris. In this video, I with my other group member, which is Haziq, Aisyah, Ameera, and Batrisya, will to explain about business and legal requirement if ABUR partnership decide to change their business entities to company. Before we start, let me give you a short brief what is the video all about. Financial advisory services for ABUR partnership, which is Badrul, will suggest them to change their business form into the company form. But Ali, Abu, and Amma still not confident. Badrul wants us to help him to convince them about the suggestion by making video presentation about company with ABUR enterprise.
Next, we move to classification of company based on Company Act 2016. For the first one, company limited by share means that its obligation to the company is limited to the amount, if any, unpaid on share held by the members. Next is company limited by guarantee. Member liability is limited to such amount as the members undertake to contribute in the event of the company being wound out. For unlimited liability company is one formed on the principle of having no limit placed on the liability of its member. In Malaysia, we have 5 types of company exist. First is public companies. To know whether the company are public or not is from their name, which have word Berhad as part of and at the end of its name. Public company can be limited by share or guarantee. Minimum members to form public company is 2 and the maximum members is no limit. Public company able to offer its share and debentures. Public company also listing on a stock exchange. Example of public company is Maxis Berhad, Maybank Berhad, and many more. For private company, different with public company, which just have the word Sendirian Berhad as part of and at the end of their name. Minimum member to form the private company is 1 and maximum member is not more than 50. Private company is prohibited from making any invitation to the public to deposit money in the company. Example of private company in Malaysia is Proton Holdings. Next is XM private company. XM private company basically is a private company, but XM private company not have more than 20 members. Shares are not held directly or indirectly by any corporation. An XM private company need not file its annual financial statement with registrar of company provided. Company is able to make its liability as when they fall due. Move to foreign company. Foreign company is company, corporation, society, association, or other body incorporate outside Malaysia. An unincorporated society, association, or other body that can sue or be sued or hold property under law of its place of origin and does not have its head office or principal place of business in Malaysia. The company's targets are high and they are able to generate substantial profits. Lastly, government-linked company or GLCs. GLCs is corporate entities in which the government owns some or of the share capital. Company could be public or private company. GLCs aim to boost the country's economic development and be a formal government agency. Example of GLCs company is like Malaysia Airlines System, Tenaga Nasional Berhad, and Telekom Malaysia.
Okay, let's move to the next slide, which is financial reporting requirements based on Companies Act 2016. Okay, in this topic, we have section 248, which is the directors of every company shall prepare financial statements. The financial statements referred to in subsection 1 shall be duly audited before the financial statements are sent to every members under section 257 and laid before an annual general meeting under section 340. Okay, for Financial Reporting Act 1997, we have three parts, which is finance, standards, and general. Okay, for part 3, which is finance, we have section 19, the fund. The fund shall consist of such sums as may be provided from time to time for the purpose of this act by Parliament. Such contributions as may be made by any person, including industry groups or corporations. For part 4, which is standards, section 26B, standards for foreign companies. Financial statements which are required to be prepared or lodged under any law administered by the Securities Commission, the Central Bank, or the Registrar of Companies by foreign companies listed on stock exchange in Malaysia shall comply in their entirety with either any acceptable internationally recognized accounting standards or MASB approved accounting standards. For part 5, which is general, we have section 28, confidentiality, except for any of the purposes of this act or for the purposes of any civil or criminal proceedings under any written law or for the purpose of existing any authority or agency in the performance or exercise of its functions or power under any written law in Malaysia, the Foundation and the Board shall take all reasonable measures to protect from unauthorized use or disclosure any information given to the Foundation or the Board in confidence. For Section 29, power to make regulations. The Minister may make such regulations as may be expedient or necessary for carrying out or giving effect to the provisions of this Act. Okay, we move to the elements of annual report. In this topic, we have chairman's letter, business profile, and financial statement. Chairman's letter. This is generally the first part of an annual report. The chairman's letter will set the tone, establish a theme, and most importantly, summarize the report for the readers. The letter will highlight the company's accomplishments for the year as well as the company's failures. For business profile, the business profile is a basic element of an annual report. This section describes the company, including what it does to generate revenue, its products or services, its operations, subsidiaries it owns, if any, and risk factors for the business. For financial statements, in the report, the company presents the basic financial statements. Most businesses won't provide all of the financial statements because that generally causes information overload and most readers of the report won't go through everything. That's all from me, Nina Aisyah. Thank you.
Okay, Assalamualaikum warahmatullahi wabarakatuh. Today I'm going to share with you a few subtopic, which is the first one is legal requirements in Bursa Malaysia Securities Berhad, and the second one is advantage and disadvantage of company from business. So there are a few legal requirements in Bursa Malaysia Securities Berhad. Firstly is advisor, a person registered on the register sponsor. As principal advisor, your investment bank will advise you on the optimum listing structure, timing of the listing, and pricing of your company. It also advises on all regulatory requirements relevant to the process. The second one is Approved Accounting Standards Board, Approved Accounting Standard Board, known as MASB. To adopt financial reporting standard, director of a company must present financial statement to the shareholders in a general meeting within 18 months of incorporation and subsequently at least one in every financial year at intervals of not more than 15 months. The financial statement must be prepared in accordance with approved accounting standards by MASB. And the last one is associate. In relation to a director, shareholder, substantial shareholder of an applicant or a listed corporation, individually and collectively referred to as associated party, means a person who falls under any of the following categories. For example, a family member of the associated party. Advantage and disadvantage changes from partnership to company from business. The first advantage is limited liability. The liability of shareholders, unless and otherwise stated, is limited to the face value of shares held by them or guarantee given by them. Second, transferability of share. If the shareholders are displeased with the progress of the business, they can sell their shares anytime. And the last one is perpetual existence. Thus, insolvency of shareholders or directors do not affect the company's existence. Disadvantage. The first one is restriction. Company has more to comply with more legal requirements. Second, lack of personal interest. Since they are the employees, not the owners, they do have hardly any personal interest and commitment in the company. And the last one is separation of ownership and management. The ownership and management of public company is in different hands. That's all from me. Thank you.
Assalamualaikum. I am Batrisya Azra from the IFOE. Today I'm going to tell more why company is better than partnership according to their element disclosure in financial statement. So all business keep financial record as a way of tracking their business performance. So let's see the balance sheet first. So the balance sheet in the company show the total shareholder equity, while in the partnership, the balance sheet of partnership show each partner equity with the total liability and then plus with partner. The statement of equity in the company has only one column, which is show the total equity. But in the partnership, they divide the equity by each partner and then go along with the total equity in the statement of equity. So the income statement. The income statement also has been called as the profit or loss statement, show a business income and expenses over a set period of time. So in the company, they record the income statement as usual, which is the revenue and expenses are not categorized by the shareholder or by members. But in the partnership, the revenue and expenses in the income statement are categorized by each partner and then go along with the total revenue and total expenses for both partners. Okay, tax payable. Tax payable by company is known as a corporation tax. Corporation tax is a direct tax which the maximum corporate tax is 35%, which the corporate tax is fixed regardless of income is increased or not. But in the partner and sole trader are personally liable for the income tax on the profit made by their business, and that called personal income tax. Personal income tax is vary from country to country because of different laws and government system. But personal income tax is not fixed. Who earn more subject to a higher tax rate. So to conclude this, I would like to highlight that partnership are somewhat inflexible when compared to company because the numbers of members in the company can be added to 50 or can be 50 members, but in the partnership they're only limited to only 20 members, which this shows that partnership is somewhat inflexible business structure when compared to the company. So I think that's why our partnership should consider to change the partnership to the company. Thank you.